So just looking at the Chinese equities this morning, we were showing some of the ETFs that track Chinese equities earlier in the show. We didn't see a lot of big moves. Was this already priced in when it came to Chinese stocks?
I think that to some extent, market probably expected this, given the complexity of the negotiation of two countries on the topic of tariff. And so that's why I think to some extent that you don't see massive rally. And on top of that, this is just extension, meaning that negotiations that continue on, and there's still a lot of details of the trade discussion between two countries need to be ironed out. So that's why I think there is some wait and see kind of attitude baked into the market right now.
You know, we spend a lot of our time focused on Chinese tech, companies like Huawei, Meituan, et cetera. But when we're looking at this temporary tariff pause and the fact that we won't see tariffs jump back up to 140% for another 90 days, beyond tech, what other areas of the Chinese equities do you see as beneficiaries?
Yeah. So I do think we have to focus on maybe where there's a growth segments within China. And we're aware that China still is grappling with this deflationary pressure from domestic consumption perspective. Having said that, we've seen some new consumption themes coming through in China. And this is probably not only just among the younger generation, also more broadly based, including such as some jewelry consumption, some collectible toys consumption, skincare consumption, travel, and all that. So the newer generation of Chinese start to really feel facing this challenging backdrop of the economy and the future unemployment prospect, which is pretty challenging. They just wanted to indulge themselves as they can. So this new consumption theme, I think, continue to play out given this generational and also the current effect as we're seeing. In addition to that, we also see some other industrial-related industries, such as EV, continue to play out nicely, given that China continue to upgrade their products and also the technologies as a global champions.
You know, Vivian, very quick question about the EVs in particular, because the EV market in China has obviously become a driving force just for their economy and the fact that they export some of these EVs other places. On the reverse of that, do a lot of these EV makers, do you expect them to need to pull forward imports of other things that they need? Does that impact their margins? Does that impact the performance of those companies in particular, even though we know their sales are growing?
Yeah, I think the bigger question about the Chinese EV producers more about the domestic side of competition, given that, as I said, a lot of EV producers start to come out with a very, very high quality, advanced products, very nice user experience products. So we do see competition on the pricing and the product side kind of continue to rise in China.